Yeah, good morning, everyone. Uh, US market on Friday continue to see improving trend, further improved based on the uh, whatever they had gained on Thursday. Uh, the gain was mainly driven by again the dollar index further coming off, though bond yield remain more of a stable. Uh, so the expectation of inflation will be coming off in the coming period, continue to push the market. Uh, though futures of the US market are marginally lower in today's morning trade. On the other end, if we see Asian market, they are more of a mixed trend which we are seeing. We are seeing Japanese market are down mainly on account of the SoftBank, which has reported results, has brought down the index, has an impact on the index itself. SoftBank was down by almost around 11%. Apart from that, even on the other hand, China has indicated that they will be reducing the zero COVID policy, and that is supporting the market in Hong Kong and in China as well. Other markets are also mixed. Some are marginally up, some are marginally down. On the other hand, because of this China relaxing COVID policy, we are seeing some up move in the oil and also the metal. Oil is now at around over $96. And also iron ore is up by around 2.5%, and steel is up by around 1.5% in today morning in China. So overall seems more of a mixed reaction from the international market. In Indian market also, though we saw very good improvement in the indices at a larger level, but mid cap and small cap are struggling to perform in this rising market. So one need to be careful in that perspective. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. Today, the market is likely to open on a flattish note, and we are likely to witness some sideways momentum during a day. Friday, the Nifty has opened with a huge gap up and maintained a very strong closing above 18,350 levels, which gives a very strong signal. But looking towards the Bank Nifty is very facing a very strong resistance at around 42,500 levels, and somehow manages to maintain a closing above 42,200 level. But as of now, it's not showing a very strong sign, which might trade a Bank Nifty on higher sides. So we might witness some profit booking at the higher level on the Nifty front in the coming few trading sessions. As of now, for a Nifty, 17,400 will act as a crucial resistance level. If it surpasses that level, then 17,470, 17,540 levels can be seen on the high side. Whereas on a down, whereas on a downside, sorry, 18,000. Whereas on downsides, 18,270, 18,100 will act as a very strong support level for the Nifty front. Coming towards the Bank Nifty, 42,470, 42,640 are the resistance level we need to keep eye on it. Whereas on the support side, 42,100 and 41,800 are the crucial support level for the Bank Nifty. Coming towards the Nifty Finance, 18,300, 18,430 are the support level we need to keep eye on it. Whereas on the downside, 18,040, 17,890 are the crucial support we need to keep eye on it. I think that's it from my end. I requested with you guys to take a call forward.
Yeah, thank you, Swati. On the derivative front, see, majorly all the indicators are still positive. The open interest is at comfortable levels, PCR again at comfortable levels. Mostly, in this whole last 6-month period, VIX had been very important, and because of which we had seen, such upside and downside both. Now, VIX has come down below the 15 levels. This is a very good sign. So generally, whenever such thing happens, you will see, a further rally, probably, one can say a one-way rally. which can probably take Nifty higher. Having said that, there is only one indicator right now that is, a little worrisome. That is the cost of carry. The premiums are really high. We are in the middle of the expiry, and only about 2 weeks left for expiry. We are seeing the cost of carry increase further. It's gone above the 70 levels, and that is the only reason why you can feel that some amount of selling can come in the intraday or probably 1 or 2 days perspective. But overall, all the data is positive, so we will see buying coming in again from the lower level. So the view is positive for the next 5-7 days, but in the near term, for 1 or 2 days, you might see some selling from the higher levels. Look out for the same. From the options front, 18,500 call has the highest open interest. However, you are seeing a good amount of open interest being built in at 19,000 strike as well. But again, 18,000, we have crossed 18,000 comfortably, but still, there is a sizable amount of open interest built up at the 18,000 call strike. Now, it is, generally such a thing doesn't really happen much. So if we do fall from, the 18,400 odd levels to today or tomorrow, it remains to be seen till where, this fall will come in. At the early point, it is still indicating that it probably, 18,000 might be touched in the next couple of days, and then probably a bounce back can come in. From the stock specific front, the IT sector has witnessed good buying. As I had been saying throughout the expiry, even though there was selling that was coming in, the IT sector doesn't have many short positions, and that is why, as a whole, the IT sector should move out now, and some more buying can come in Infosys, Tech Mahindra, TCS, and the other stocks. So look out for the same. I still hold by the same view. You can still continue to buy on dips in this sector. Some good amount of returns can be made. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. LIC result has improved. The comparable AP figure was not provided for last year, but on the value of new business front, the first half number is saw a good jump at 3,677 crores versus year on year almost 1,600 crores. And similarly, the VNB margin has also increased in the first half to 14.6% against 9.3% year on year. And Indian embedded value increased 1% year on year at 5,44,000 crores. And accordingly, stock is trading at 0.8 times market cap to EV. Since LIC's embedded value has higher correlation with the performance of equity markets and with markets rising recently, and so we think that company is likely to do well in the near term. So possible that the re-rating can happen to maybe one-time market cap to EV. Mayur Unicota's result was okay. Revenue was flattish quarter on quarter and increased by just 4% year on year despite a low base last year. We compare the year on year figures, growth against user industries such as auto, passenger vehicles, and footwear. Then these industries saw much better growth compared to Mayur. EBITDA margin was flat at 17% sequentially, and also profit was flat QOQ as well as year on year. So nothing exciting in Mayur Unicota's result. We are neutral here. Repco Home Finance result is above expectation due to lower credit cost at just 60 basis points against expectation of almost twice of that. NPA situation was flattish, and also the entire standard restructured book as on June quarter, which was 1.5%, has slipped into GNPA, and hence as on date it is at 0. So incremental slippages are likely to be much lower, and recovery can be higher. Loan book was flat, although disbursement is accelerating with every passing quarter, and we think by the year end loan growth can be around 8% year on year. Stock is trading at 0.7 times price to book, and even in last couple of quarters, it has been doing ROE of 12%. So we think with comfort on future credit cost, stock can re-rate to 1 time price to book. Manappuram Finance result was above expectation after continuously posting bad results for last 3-4 quarters. Two positives in the result were that yields in the standalone, that is the gold business, increased sequentially to 22% against June quarter's 20%. However, on year-on-year basis, it was at 25%. So we can infer that the competition from banks has peaked out. And even on the non-gold business, which is close to 30% of the total book, consisting of microfinance mainly and even CV and home loans, that book together grew by 12% sequentially and 18% year-on-year. So good growth momentum over there. On the negative side, the gold loan AUM declined 6% quarter-on-quarter and was up 3% year-on-year, resulting in the consolidated AUM remaining flattish. And second small negative was that microfinance GNPA increased from 7.7% to 8.8%. However, net NPA over here remains low at just 1.3%. So because of the good bounce back in the yields, we turn positive on the stock and think that in the short term, there could be some positive reaction. However, in the longer term, if somebody wants to form a view, then we stick to the view that gold price performance remains the key trigger going forward from long-term point of view. Electronic Smart India, then recently listed IPO into consumer durable retailing. The result has declined. Q2 is seasonally a small quarter. So we compare on year-on-year basis. The revenue grew to 32% year-on-year. However, gross margin and EBITDA margin both declined by 100 basis points. EBITDA more than 100 basis points. EBITDA margin came at 6.1% against year-on-year 7.5%. And profit was flat year-on-year. So we are neutral over here. Pitti Engineering result was also average, nothing to speak of much. Order book declined from 950 crores to 880 crores quarter-on-quarter. And revenue and profits were flat, just like June quarters. This has been the case in last 4-5 quarters, and management has not been able to deliver on what they had promised. So we would suggest to wait and watch in the stock. Much better opportunities available at the current point. Thank you. That's it from my side.
Good morning. Easy Trip Planners posted improved set of numbers for the quarter. Revenue improved by 23.9% QOQ. However, EBITDA margins came in at 33.9% versus QOQ of 47.5%. Low EBITDA is on account of higher ad spend. Stock is trading at a PE of 40.4 times FY24 EPS. Outlook is neutral. Delivery Limited posted okay set of numbers for the quarter. Revenue improved by 2.9% QOQ and 19.9% year-on-year. EBITDA came in at a loss of 137 crores. Stock is trading at 87.8 times. Outlook is neutral. Thank you.
Good morning. Mahindra & Mahindra announced its results. The result was in line with expectation. Revenue came in at 20,839 crores versus an expectation of 20,424 crores, which grew by 6% sequentially and 57% on a YOY basis. EBITDA margin came in at 12% versus an expectation of 12.2%. The company posted a strong volume growth of 77% on a YOY basis and 17% sequentially in the automobile segment and 5% YOY in the farm equipment segment. The management has guided for a 5% growth in the farm equipment segment in FY23. Going forward, M&M expects margins to improve in the second half of FY23, led by softening commodity cost inflation. The company took price hikes of 2% in the second quarter and a further 1% price increase in November. The management highlighted that commodity costs have cooled from the highs witnessed post the start of geopolitical tensions in Europe. The stock is trading at a PE of 16.6 times FY24 EPS. Thank you.
Good morning. Patanjali Foods Limited reported results, and the results were declined during the quarter. The revenue reported at rupees 8,514 crore, which is not comparable with the historical performance as Ruchi Soya's food retail business is acquired in September 22. With respect to different segments it operates in, the margin performance of oil and vanaspati segment has delivered negative performance of 8% due to sharp fall in global edible oil prices, which resulted in fall in the prices of companies and products in line with the industry players as to sustain the market share. And it has passed on the benefit of lower prices to the customers. So further currency depreciation also impacted the overall margins. Other segments like seed and extraction margins were flat, while wind turbine power generation margins were lowered at 30% compared to 52% in the previous quarter. However, food products and other segment margins stood at 25%. Overall EBITDA margin reported at 2.3%. During the quarter, the company has reduced its long-term debt from 2,706 crore to 75 crore, and total debt has reduced from 3,500 crore to 500 crore. The management is focusing on its food and FMCG business with a strategy to expand its business penetration through its distribution network of edible oil business, which is expected to improve its margins gradually. The stock is trading at a PE of 24.5 times to FY24 EPS, and we are positive on the stock with a long-term view. Emami Limited result were below expectations. Revenue reported at 800 crore, which grew by 5.2% QOQ and 3.2% YOY. EBITDA margin came at 24% compared to 35.1% YOY. During the quarter, domestic FMCG industry remained soft, while international business continued to grow by 17% on account of good performance across the most markets. In domestic market, it was largely impacted due to inflation, rural slowdown, and liquidity pressure. The modern trade grew by 28% and e-commerce grew by 55%. The revenue contribution by both the categories stood at 16.5% of domestic business. Management expects double-digit growth in second half and aims to deliver absolute growth in the EBITDA compared to FY22. Further, it has reduced its rate from 263 crore as in March 22 to 79 crore, which will have a positive impact on its profitability growth. The stock is trading at a PE of 23.7 times to FY24 EPS, and we are positive on the stock. KRBL Limited result was improved during the quarter. The revenue grew by 25% YOY at rupees 1,320 crore. Export revenue grew by 105% YOY at rupees 592 crore on account of strong growth from key markets like Saudi Arabia and UAE. EBITDA margin improved at 21.6% versus 18.8% YOY. During the quarter, basmati realizations were increased by 42% over quarter to FY22, which were partially offset by 27% increase in rice input cost over the same period. That resulted into improved gross margin. However, the same improvement was again offset by rise in logistics cost and advertising cost, which reflected in the EBITDA margins. In traditional and modern trade, KRBL enjoys 32% market share in packaged basmati rice. The stock is trading at a PE of 16.8 times to TTM EPS. India Pesticides Limited result declined during the quarter. The revenue reported at 40% YOY growth at rupees 251 crore. This was largely on account of a company's increase in demand for existing as well as new products. EBITDA margin lowered at 21% compared to 30.7% YOY due to increase in raw material prices and energy costs during the quarter. The stock is trading at a PE of 14.8 times to FY24 EPS, and we are neutral on the stock. The Camlin Fine Science Limited result was improved. The revenue grew by 55% YOY at rupees 483 crore. The growth was supported with an increased capacity at diphenol plant at Dahej, and EBITDA margin came at 11.4% versus 7.3% YOY. Stock is trading at a PE of 15.3 times to FY24 EPS, and currently we are neutral on the stock. Thank you.
Yeah, apart from this, one or two more stocks. Like HOEC came up with the number on Thursday, but in the con call update, what company has indicated that their BAT, wherein the well was discontinued for some time because of some technical issues. In that, gas production has again restarted in November, and also they are targeting with the corrections in the some technical issues. The oil production can also start from January. So we had seen this problem, production from BAT getting delayed to various times. So there is lesser confidence from the investor side that the production is likely to come up at a normal level in the coming period. But anyhow, if suppose the production starts with the corrections of the technical issues, then the upside is good for the company. Anyhow, the company will be benefiting from higher gas prices, which has been uh, announced by the government from 1st October for the third quarter, and also the gas supply which has already started will also add up to the profitability of the company, where they are currently realizing around $13 against the administered price of around $9. So results anyhow are likely to be better in coming quarter. Only thing is whether the oil production from the BAT starts or not. If suppose that starts, then the upside is quite substantial. So looking at the scenario, it looks like the risk reward is quite in favor of the company. One can take the riskier investment for the next 3 to 6 months, wherein if the positive result come, then the return can be good and downside looks limited from here. Another company, ESUB India, reported good numbers in this quarter. The revenue improved. So the company has reported good numbers, wherein we had seen a very good growth in the revenue. The revenue has grown by almost by around 25% year on year, and EBITDA margin also saw some improvement. We had seen around 16% EBITDA margin against last year of around 14.6 and last quarter of 14.7. So good improvement is visible both in revenue and EBITDA margins. Shares is though running at a bit costlier valuation of around 55 times trailing EPS, but looking at the promoter pedigree, that is foreign company, and quite substantial strong performance, the stock can still perform from here. Another company, that is ABB, reported good numbers ahead of expectations. Order book also shown good improvement. Order book came in at around 6,500 crores versus last quarter of around 6,000 and last year of around 4,800. And also revenue improved by around 19% and came ahead of expectation of around 2,000 against 2,000 crores. It has come at around 2,100 crores. And also EBITDA margin was more of a margins were ahead of expectations, which came at around 10% versus expectation of 8.4%. So ABB also reported good numbers. This also stock can see some movement into this trade. So now I'll request technical team to commodity team to take up from here.
Yeah, thank you, sir. Good morning, everyone. Today, we might witness positive momentum continue. However, correction might be witnessed, as in the prices have rallied and cool off can be witnessed. So we recommend to go long in gold around 5100 to 52,000 with a stop loss below 51,800. prices can test 52,500 on higher end, and test the recent highs at 52,500, 530. Silver also, there is a resistance around 61,900 to 62,000. So prices could test 61,900 and witnessed some profit taking. So selling around 61,900 is recommended, and one can maintain a stop loss of 62,100. Prices can correct till 61,200 to 61,000 on lower end. In crude oil, we expect some range bound movements. It could trade in a broad range from 7,000 to 7,300. One can initiate a buy around 71.80 and maintain a stop loss of 7,100. Prices can test 72.50, 7,300 on higher end. Then again witnessed some selling pressure. In natural gas, we have witnessed some sell-off from 500 odd levels. So one can sell around 500 with a stop loss of 510. Prices again are supportive at 475 to 470. And in metal front also, we expect prices to rally, and buying on dips is recommended. Copper 689 to 696 is recommended with a stop loss of 692, and prices could rally further if sustains above 702 levels and test 710 to 712 levels. Aluminum is also looking attractive. Uh, Buying on dips is recommended. 210, 208 are good levels to enter long, and we can expect prices to test 218 to 220 on higher end. Similarly, zinc is also looking attractive. One can initiate by around 270, and we could expect 280, 282 levels in coming days. So prices are supportive at 268 to 265 levels. So buying around 270 to 268 is recommended, and maintain a stop loss of 265, and prices should rally further. So that's it from me. I'll ask Riya to take over from here.
Thank you, sir. So on the currency front, we are seeing a dip into the dollar index, and it is currently trading at 106.67. The same momentum can be seen into the USD INR pair as well. It is currently trading at 80.72, but once there could be some retraction or retracement of the weakness can happen in the intraday sessions, but a sell on the rise should be the strategy. 80.89 is the resistance in today's session, and 80.46 is the support. Once the pair breaches the support, it can even test the lows of 80 and 79.80 in the coming sessions. So maintain of a view of selling the USD INR from the higher highs. As far as other currencies is concerned, JPY INR could see a positive momentum in today's session towards the level of 58.25, 58.52. So you can go long into the JPY INR above the level of 58.16 for a target of 58.35, 58.52 by keeping the support at around 57.85. You can also go long into the Euro INR at the current rate for a target of 83.51 with the stop loss at 83.25. In GBP INR, there is a lot of the GDP numbers has come on a contraction side. Also, there will be quite a bit of statements that have come which are indicating that the current government could go for a rise in the tax rates. So everything will lead to a contraction into the economy, and thus we could see a sideways momentum into the GBP INR in today's session. The support is placed at 94.70, whereas resistance is placed at 95.36. So that's all on the currency front. Thank you.